Hello everyone, welcome to the Tech Podcast series. This is Lakshit Pant, your host for today, and I'm having an amazing person with me, Viram Shah, over here, and he's an entrepreneur, and he has been doing some really amazing work in the financial industry. And I would really ask Viram to give a little bit intro about yourself. Could you please do me the favor?
Sure. Firstly, thanks for having me here, Lakshit, and great to be here. In terms of my quick introduction, so I run a company called Vested Finance, which basically allows you to invest in the US stock market from India. And in terms of my personal background, I have always been in Bombay most of my life, actually. Grew up here and went to the US to do my MBA. That's where we started Vested. That's where I met my co-founders there, and now it's been about 3.5 years since we've been working on Vested.
Yeah, sounds fascinating. And Viram, I was just going through your journey, and you are an engineer, and it's really vogue like engineers can do anything. And so for this podcast, I was doing my homework, and I really found your journey very fascinating. And you have started really great, and you have started from writing, then to marketing, then to investment field, then to banking, and now you are building a superb idea and transactional future. So how has been your journey to here?
Yeah, I think for me, over the last decade or so since I've been working, the goal has been to try as many diverse experiences as possible. Growing up, I spent time with my family business. So I come from a family that has been doing business for a while. So I spent time there and realized that entrepreneurship was something that I really liked. I wanted to do it, and all of the steps that I've taken have been eventually towards this goal, but trying to do different things to learn new skill sets along the way. So undertook engineering and did telecom engineering. Actually, I realized then that I really like coding and technology, and so wanted to do something in technology over the long run. Even tried starting a business when I was doing my engineering, but that didn't take off. And then post engineering, actually got the opportunity to switch to the world of finance. So I was always very interested in the world of business, and in engineering you have a good fold of numbers, right? And that's the similar sort of underlying thing in finance as well. And that's how I made my entry into the world of finance. Worked with JP Morgan for about 3 years in Mumbai, got the opportunity to work in Hong Kong and get that global exposure, and that made me feel like I should get more global exposure to open sort of your perspective. And post that, so then decided to do further studies internationally. Went to the US, to Berkeley, to do my MBA, and the goal was 2 years of MBA. Try and see if we can start something there, because it's a time that you get off from work. And so tried multiple ideas, of which one of them was Vested, and so then the journey with Vested began.
So I wanted to explore. So this might be a little bit personal question, but I really want to know, like, how do you think the business analytics? I'm asking this question because I'm also very much interested in tech sales. So I wanted to explore, like, how does sales and doing the business analytics from a foreign university help you out, and what are the key aspects that you took from the MBA thing?
I did an MBA from Haas School of Business. So overall, an MBA is very helpful because one, it gives you a network. It gives you the opportunity to meet like-minded people. Like I met my co-founders, we met our first investors there. What it also helps you do is, so for me specifically, I wanted to be in a location where I get access to a lot of different kind of opportunities in entrepreneurship, and being in the Bay Area, being in Silicon Valley, of course, really helped me there, because you're very close to lots of VCs, lots of other startups that give you inspiration. And so that was very helpful. And then, of course, you have amazing professors, and I had a few of them who really mentored and guided us in the world of entrepreneurship, and that all of that in some way or the other combined led to Vested getting started.
Yeah, that's your journey has been incredible. And what do you think, like, what for the young entrepreneurs who, what advice you will give them, how they should explore the investment and all these business terms? Because we all know the reality of the education system right now. What do you really think, how one should access, because we all have the tech access right now, everything is online available for free. How do you think from where one should start?
Yeah, I mean, if you want to start in the tech world, I think it's easier than ever now to start, right? So you have so many no code tools for you to get started building a landing page and testing your ideas and running a few ads on it and seeing how if there's traction on it or not, right? And so that would be my advice. If you want to really do business, and if you have something that you think might be interesting, just build it over a weekend. And as engineers, you have the capability to do that. So build it over the weekend and test it out in the world, and see if it works. Then that's something you can do, or else don't get dejected, just keep continuing to do it. So for me, at Vested, we tried almost 50-60 ideas before eventually landing on something that actually worked. So it's a long process, but if you really like it, you'll enjoy the process, and it won't feel like it is multiple sort of steps that you need to take.
Yeah, and if we see the Indian market now, I'm just taking this podcast to more of stocks and investing side. So if we see the Indian markets, there is a lot of volatility and dependency on the statements of executives, and we see all of the news that we heard every day, and which makes people somewhere afraid about investing in the stocks, especially in US stocks. So how do you think this could be overcome during the period of time or at present?
I think that's changing, right? If you look at our previous generations, they always viewed stocks as gambling, and fixed deposits or real estate or gold as the only investments you should make because they are safe. And as investor education improves, and that's a lot of it is being done by startups, by the regulators, as that improves, the amount of people participating in the markets will keep improving. And that's a good thing, because at the end, one way to create, or a really good way to create wealth for individuals, is to invest in a company that is creating value, right? Unless you're a part of something that is creating more and more value over time, you won't necessarily grow your wealth, right? It will stay constant, or it will keep growing at a fixed rate, which you don't want. You want to keep growing your wealth, and so as more and more people enter into the equity markets, it's a good thing, as that will help grow the overall wealth of the country, as we've seen in developed markets. And naturally, as more people invest in the domestic markets, what we've also seen is more and more people get interested in the international markets, because the first step for you is to take your plunge into, let's say, a mutual fund, or investing into a direct company, and then you can think of, okay, what is an international company that I want to invest in, right? And today we are all very familiar with international companies. I mean, the likes of Microsoft, Apple, Google. So we use their products, we know those companies, and naturally there is a knowledge about those companies. With that awareness and knowledge, it becomes easier for somebody to start investing internationally. And so as people think about more and more investing, international investing will also become more popular.
Yeah, and when you talk about investing, what's the definition of a good investment and a bad investment according to you?
I mean, any investment that makes money is a good investment, right? I think bad investments happen when they are made in made using emotions rather than logic, and so a bad investment would be just you acted on somebody's tip without having any kind of idea of what to do, or you saw a piece of news and you were like, okay, this is something I should do. Or it could also be sort of you got scared and you sold off everything that you had bought, right? That is also a bad trade that you made. So emotion driven decisions tend to be or misinformed decisions tend to be bad investments, while good investments tend to be more thoroughly researched, more within your confines of what you know. If you don't understand a business, don't invest in it. You should pretty much be investing in businesses that you can only understand, or then sticking to a disciplined approach of investing in mutual funds. That would be a good investment.
Yeah, and just a follow-up question upon that, like how do you think investment that gives quick returns, or investment that is a long run thing?
You're smiling it as you say it. You know the answer is not going to be quick returns, right? It's I mean, that anything that, in my opinion, goes up quickly comes down also quickly, and so that has been a life lesson I have learned the hard way. And in the investing world also, that is very applicable. And so you have to spend some time in the market to get your returns. You cannot hope for overnight returns and to become a millionaire overnight, right? You have to make good decisions over a period of time, but then that will give you returns, and that patience is important.
Yeah, and what do you think? What could be the reason for Indians? Because we have seen this trend right now, especially in the new generation that we are experiencing right now, that Indians are very much investing into the US stocks. The growing of what is the reason behind this growing interest of Indian investors in the US market?
So one reason is what I mentioned earlier, right? We are already very familiar with a lot of global, especially technology brands that are listed in the US markets. There is Apple, there is, the big five that you already know of. There's also consumer brands that are popular, like you will probably have heard of Disney, Nike, Starbucks. So there are big companies that we are familiar with, and we naturally have an interest in investing in them, right? Because we're consuming their products. So that's one big reason why people invest. The other is we are also very aspirational. The next generation of Indians wants everything on their fingertips, wants to be global in nature, doesn't want to settle for anything less, and so they want to study abroad, travel abroad, live abroad, and for that they need money that is relevant, right? And today investing in the dollar helps you save for your international needs, and so that's one other reason we've seen people investing in the US markets. And then lastly, it's just people who want to diversify. So today, if you're thinking about your investments, the reason why you try and diversify your portfolio is you want to reduce your risk, right? So you put some money into real estate, you would put some money into gold, you would put some money into equities, like that. One way to diversify is to put money in another geography. So diversify the country risk that you're taking. Basically, today, if I'm investing all of my money in India, if anything changes, my entire portfolio will go down because it's a country that is tied to. So you want to be diversifying your portfolio globally as well. And so that's the third reason why we see people investing. They're basically just diversifying their risk, reducing their risk by investing in different geographies.
Okay, yeah, that sounds amazing. And what are the best way, according to you, to invest in US stocks from India and be profitable? And the most important to how to explore vested and how we can just use vested to invest more in the US stocks.
Yeah, so there are a couple of ways in which you can invest. The one which we provide as vested is the direct way of investing, which is you're opening your own brokerage account. You will be transferring funds under the what is called the RBI's liberalized remittance scheme. Is basically it's a regulation that the RBI has brought in, which tells you that, and as an Indian resident, you can transfer up to $2.5 lakh yearly internationally, and you can transfer that for different reasons. One of them is investing internationally, right? So you would be transferring money on your own using the vested platform, and then you can place your own trades, build your own portfolio the way you want. The other way to invest, which is an indirect way of investing, is you can invest in a mutual fund or an ETF that invests in the international market. Now, different people prefer different either of these choices, in fact. And if you want more flexibility, if you want to build your portfolio the way you want, sorry, you may pick the direct one. Or if you want to, let's say, invest in one or two steps, you don't want to pick the companies, you can invest through a mutual fund.
Okay, and it doesn't require any extra authentication or maybe any extra brokerage system. We can do it directly from the Vesties only, right?
Yes, you can do it through the Vested app or the Vested website. Everything can be done at your fingertips, and it requires you to go through a KYC. So you'll be opening a brokerage account internationally. But then it's a very seamless process, and everything can be done in minutes, and everything is done digitally.
And I have seen one thing like DIY, do it yourself West, an initiative to encourage investors to create their own US stock portfolio and invest in. So can you please throw some light to enlighten on this?
Right. So okay. So what happens when you start investing in the US markets is you open your brokerage account. You then load money into that account in dollars. So because it's a US market, you have to place trades in dollars. So you convert rupees to dollars. Once your money is in, that's when you have to pick what you want to invest in. Now, since the US markets are very new, what we saw was our customers didn't know beyond an Apple or a Google or an Amazon what to invest in, and which is why we created portfolios for them, which we call Vests. These portfolios you can easily use to start investing in the US markets. Then what we saw is the customers really liked this entire portfolio structure and wanted to keep investing in the portfolios, but they wanted to create their own portfolios. These customers who were doing their own research, and which is why we launched what we call today DIY Vest, which is do-it-yourself Vest, which is wherein you can create your own Vest portfolio and keep investing in it in an easy manner. So it really helps simplify the journey for our customers. And what we've also launched along with DIY Vest is advisor Vest or professional Vests. And these are created by experts who come onto the platform and create and basically give their strategies to us. So there are three types of these portfolios that you can invest in, which is vested created, expert created, and your own created, which is the DIY Vest you mentioned.
So maybe the DIY sounds much better to make among all the investment strategies that I can say. So now talking about, like, we are hearing lots of news every day, like about the recession, and is it really there? Like, what's happening inside? I'm getting a strong feeling because most of the big brands have I'm working with just cutting their cost, and how this gonna impact if recession is there, how is it's gonna impact the future, how it's impacting the present right now.
Economic cycles keep happening, right? You will see booms, you will see recessions. There is no way around it. They will keep going up and down. It's not going to be constant. And as an investor, you have to prepare your strategy such that it can sustain through all of these cycles, right? When there are periods of boom, you don't want to become too aggressive and keep buying at a high price, right? Versus
Yeah.
when there's a recession, you should be able to continue your investment strategy even though you feel like the markets are going down. You don't have to let emotions impact your investing decision. And so today we are in one such cycle where it's likely going to be recession. And but what recession means is that growth might slow down, but companies will still keep growing, companies will still keep creating new products, and over the long run they will still keep creating more and more profits that can then be paid back to the shareholders in terms of increase in share price, right? So as an investor, you should be looking at, okay, stick to your strategy, make sure that you don't get affected by what is happening in the market. As far as global tech companies are concerned, there definitely has been some precautionary action that they have taken to reduce their employee count, or to stop working on initiatives that might not be as profitable. But they are still massive companies that are still generating tons of cash, and so they are not going to go anywhere. So as an investor, you don't need to really worry about, okay, what's going to happen in this company. It's just that you have to keep sort of investing across multiple phases so that you can then see the return when the cycle turns.
Okay, that's a very great and honest answer that you have all the points that you have mentioned. Now as you are you are leading the company, and building a product requires a lots of team effort and the constant support. How do you think you have managed to find the like-minded people? And I would really like to know, like, what's your key ingredient in managing people?
It's a lot of ownership and transparency. I think these are the two main things. If you, one, are able to hire people who are motivated, and then are able to give them that responsibility and ownership in terms of particular projects without over controlling what they're doing, we've seen that these individuals really succeed in their roles. And that's the philosophy for us at Vested, where we have a lot of ownership for our individual team members, and they, what we've seen is, even at younger ages, have accomplished amazing things. And the other pillar is transparency, which is basically making sure that there is no lack of information or wrong information percolating in the company. So everything is open, from our calendars to all our documents. Everything is accessible to everybody, so that you can see at any point in time what is happening in the company. And we are also very transparent in terms of exactly where we are in the current situation, and what is the planning, what is the thinking behind it. We've seen that creates an environment of trust in between the management and or the manager and the team member. And again, that helps sort of the individual work to their best capacity, because they don't need to worry about anything else.
Yeah, and so we are just coming to the end of this podcast. I would really like to know, like, if you will get 24 hours without any deadlines, without no pressure from family, office, friends, no work. It's like just your 24 hours. How do you like to spend those patient 24 hours?
I think I would spend it reading on a beach. I think that would be my best possible scenario.
Yeah, that's great. That's really a great answer. And it's awesome hearing your insights and discussing about the financial industry and all the Vested that you guys are building. It was really insightful. And I also explore the Vested for sure, because I also invest a lot in US stocks. So guys, definitely try out Vested. Links will be given in all the description below. And it's awesome talking to you. And if you have anything to share with the community as a one-liner at the last point of time, please go ahead.
No, nothing else from my end. Stay consistent in your investing. Make sure to invest across different assets. Don't just over-index on real estate or fixed deposits or gold or anything like that. Actual returns can only be made via equity investment. So that would be my advice. And then also look to diversify internationally via the US markets.
Yeah, so guys, you have heard the advice. So keep following us, keep following the channel. We are coming up with lots of amazing tech podcasts. Thank you for Viram for joining us here.